Toby Crabel is a successful hedge fund manager managing about $7.5 billion. But before he started to manage his own fund, he wrote a book about open range breakouts. To me, he is the grandfather of open range breakouts. Now, even though the book was written in 1990, we still can use those patterns today to generate profit. Today, we will focus on one of those patterns. It's called narrow range 4. Basically, it's about 4 bars. But of course, we will improve it a little bit, and I will show you how to build it in StrategyQuant X, how to generate strategies from it, and how you can build a portfolio of those strategies. So this is the pattern we are looking for. Toby Crabel name it NR4, short for narrow range 4 bars. And we are looking for the current bar to be the smallest range in the past 4 bars. Now, Toby Crabel requires this bar, the one we are looking at, to be an inside bar, meaning this bar needs to be here. So this is an inside bar where the high of the current bar is smaller than the high of the previous bar, and the low of the current bar higher than the low of the previous bar. Now, Toby Crabel used that pattern, but I will use this pattern, meaning I don't care where this pattern sits. If it's here, if it's here, if it's here, it doesn't matter. I will take the signal anytime this bar happens, which is the range of this bar smaller than all these bars. So once we find this bar, we will take the breakout above the high or below the low. So once we find the smallest range, we will take this breakout above this level or below this level. Now here is another way to look at it. Just remember, we are looking for the smallest range in the previous number of bars. So for example, here, this is also the smallest range in those bars. Like, this doesn't have to be sequentially lower or higher. We just need to see a small range smaller than the previous 4-bar ranges. So here we are in StrategyQuant X, and I built these custom blocks for the narrow range, and I added 2 more, which is true for X number of bars. So true for X bar, meaning that this bar now, if we're looking at this bar, this is also smallest than the previous 4 bars. So meaning this one, the condition here is true, and then the condition here is also true. And that's for the X number of bars mean. Now, these custom blocks will be available in my Discord server if you want to download it for free there. Okay, so here we are in Algo Wizard, and we will build this strategy. So let me add the narrow range bar, and we will use the smallest. That means we are looking for the smallest range in a previous number of bars. Now here we have the default is we are looking at 4 bars, and this is the rank. Rank means that we are looking at the smallest, because there is another way to use it, which is maybe the current range is the second smallest, which is also okay. So we can play with these, of course, in optimization. Now, since I'm applying this to the S&P 500, and we know the US indexes have a bias to the upside, so I'm looking to go long when the price next bar breaks the high of this current small range bar. Now, usually the strategy come with long entry, enter at market. We need to change this because we want to enter at, remember, the level, the high, so we need a stop order. So let's add another action. So order is enter at a stop, and we will delete enter at market. Now the value we want to enter at high. So the high of the current bar, and we will use the global size. So the global size meaning we're using this money management. Okay, so we will enter here at the high of the current bar, and let's just exit after 2 bars, and let's see how the strategy looks like. So here we can see the example. So this is the red line, this is the bar range, and we can see, so this one is the lowest of the past 4. So we enter at the high of this bar next market. And so if we zoom in, we can see we entered here at the high here. And let's look at next trade. So here is the next trade again. So this is the bar range, and we can see it's the lowest of the last 4 bars. So we enter next bar at the high, and we exit after 3 bars. Same thing here. So here, again, this is the lowest of the past 4 bars. And we enter at the high of the previous bar, and we exit after number of bars. So we know the logic is working correctly. Of course, the strategy is losing, but that's okay. Now we want to add some percentage of the ATR. So remember, we are entering at the breakout, but what if we enter at the high plus a percentage of the ATR? So we can do that here again. So instead of this high, we can add a formula now. Okay, so now we have the high plus a percentage of ATR. So this is the ATR 20, but now this is, I added as a variable. So again, we can optimize it. This variable will be, of course, listed here. So you can see now we have the ATR delta, which currently is at 0.25. And we have the X bars, which is the number of bars that we will look back. Okay, so if I run now this, so this is now the strategy with 0.25 percentage of the ATR added to the high. And again, we can see this. And here we can see, so this bar is the smallest range in the past 4. But now we're not entering at the high, we're adding 0.25 ATR and we're entering here. And now I just add a filter, the close higher than the SMA 200. Usually this is really good filter on the S&P on the long side. And we can see it already made the strategy much better. So it's same everything, except now we are trading with this filter. Now I brought the strategy to the optimizer. So you just load it. And by default, we have the delta and the number of bars. Now, if I include periods and other parameters, the ATR period 20, we don't want to optimize that. And the SMA, which is the close above the 200 day, we don't want to optimize. Now, this is the number of bars to include. So I will do 2 to maybe 10, step 1. So this is the number of bars that we will compare the range with. So currently default was 4. I will compare it now 2 to 10. I will also optimize the percentage of the ATR. So we will go from 0.05 to 1 step 0.05. And this is the number of bars that we exit. So we'll start from 1 to, let's say, I don't know, 7, step 1. So this will give me about 1200 combinations to test. So let's run the strategy. So we enhanced the net profit. We went from 30,000 to 91. Let's look at the 91,000. So here we have about $14,000 open drawdown, and we're making about $90,000. So the equity is great. I mean, I have nothing to say about it. And this is since 2016. Okay, now since 2007, we have more profits. We have 112. And again, the strategy is doing really, really well. So here is a 3D representation between the ATR delta and the X bars. So we are looking at the net profit. So it looks like the delta between 0 and 0.4. So this is for the percentage of the ATR. So between 0 and 0.4 is good. And then the X number of bars, so if we exit between 4 and 7, that's also good. Now, if I change this to how many bars we include in the comparison, again, the ATR is between 0 and 0.4, and between 2 and 4, that's the best look back period. And you can see the profile of the strategies is totally different. So let's start from the top. So this one, the drawdown is 2007 till 2009. And then the next one, you see it shifted. This is between 2010, 2012. And the next one over is again shifted. This is the same as the first one. This is 2016, 2018. What I'm trying to say here now is instead of trading one strategy, you can combine the strategies that have different drawdown periods into one portfolio and treat it as one strategy. Of course, the ideas are unlimited when it comes to building blocks and mixing them with other indicators to build strategies. But the deciding factor is robustness. Robustness testing is the most important thing that you can learn in your trading career, because you can build really simple strategies, and if they are robust, they will keep producing profits year after year. And of course, being important, I dedicate one module in my algo trading masterclass for robustness, be it to do it manually or through StrategyQuant X automation. To learn more, make sure to watch these videos and I will see you there.